Welcome back, everybody. Another week, another Ask Me Anything happy hour. We are here to serve and answer all of your questions. We got one pre-submitted, so we're going to be right back after this. Get your questions ready, and we'll be ready to answer them. All right, we are back at it. So what we're going to do real quick before we get started, let you guys get your questions ready. It always seems like this builds. It's a slow start, and then at the end, like we're doing rapid fire every time trying to answer all the questions. So let's go around the block here. We got 6 of us on, and we got 2 more joining us. But let's start with Shauna. Just a quick intro about yourself.
Hi, everyone. I'm Shauna. I'm up here in Western New York with Chris and Gabby and Joseph. And I am having a really good week doing all the final touches for the Money Tank coming up next weekend. And I feel really good about most of it. So, that's me.
I am Gabby. Like Shauna said, I'm also here in Buffalo with the rest. I realized in our text before this that I'm wearing a Barbie-inspired shirt, which I did not plan at all. But yeah, so if anybody's seen Barbie, I've heard good things about it. Let me know what you think, because I'm contemplating going and seeing it myself. But and just to note, we have a couple fun things coming up this weekend. We always have like a back-to-back. My birthday, well, Chris's birthday is on the 28th. My birthday is on the 29th every single year. So Friday, Saturday, some big days coming up for the office.
Yay. Also, that color looks great on you, Gabby. I love that.
Sometimes I wear color. I wear black and then I wear some color.
It does. Isn't Mean Girls pink? Wear pink on Wednesday, right?
Yeah.
I know
hope I'm
that.
not a
I
mean
was wearing
girl.
pink shirts on Thursday, and they're like, "Why don't you wear it on Wednesday?" I'm like, "I'm not a mean girl. That's why." And a Coey, I was a hard no on Barbie, and now that I know it's Margot Robbie and she's incredible, I'm kind of curious. I got to see the trailer. That's what Patty and I said.
Yeah, curious. That's a good word. That's
Curious.
what I am too. My whole
Chris,
family
I
is
thought
curious.
there was going to be a picture hung up by the time this came on today, and it just didn't happen. So,
For you.
yes. I was going to put Darth Vader up right behind me, but it didn't happen.
Like that.
Yeah.
I love it if it changed every week and we never knew it was coming.
It'll be back. It'll be back. I will put holes in that wall that I made. Joe, tell us about your new house. You were giving us a tour. There was pool rooms. There's, daughters running around that have birthdays. What's going on, Joe?
I'm busy. I'm very busy, and I'm trying to fit everybody in, and I'm trying to answer my emails and my texts, and I'm trying to make everybody happy. I put out 3 fires today, so 1 fire at a time, and I promise I will get to you. I promise. I will help everybody.
Can we help Joe? Can we somebody tell him what the magic word is for Joe?
Assistant. That's the magic word.
How about
I
another
think
word?
Jason's thinking no.
There it is. That's it. That's the word.
We've tried. Joe's he's not able to say no. He's just he just needs an assistant.
Joe, maybe you can change your phone number.
Joe, you give yours to Chris. Chris will give yours to you.
Oh, yeah.
Keep each other accountable.
Well, awesome. So I guess I am the last, and with a name like Yenny, I've just been used to being typically last because, Z, if there's any Z's in the crowd, I'd love to see you here. But anyway, just staying busy like Joe, taking lots of calls, helping lots of people, trying to solve money problems. And I'm going to just flat out admit, I haven't watched the Barbie movie. I'm not going to, and I don't have anything to do with Barbie. Raised 3 girls by myself, more or less, and I had enough Barbies in my life. So moving away from Barbie.
You got the T-shirt for it. You're done.
Yeah, got the T-shirt. I was there.
So the interesting thing, I think you're going to get different answers across the board about Barbie. I went and saw it this weekend with Larissa. She wanted to see it. She got all dressed up, and I got dressed up, and we went out and we saw it. And I mean, Hannah loved it. I know Shauna liked it. It was okay. I mean, Margot being in it, like, come on. I mean, that's reason for everybody to go see it. But I mean, I felt so stupid when that movie was done. I felt like my IQ dropped tremendously after watching it. I enjoyed the movie from a perspective of, okay, it was Will Ferrell's in it. I mean, that's all I need to say. But like, what the F with that movie? Like, why is it so popular? And why do people watch it and be like, oh my God, it was so good? Like, what was so good? It was stupid as shit.
Actually, it's funny because like I drove by the transit drive-in one of these I think this past weekend. They were showing Barbie, and the second feature was Legally Blonde. I was like, whoa, that's a little much. But
I mean,
and
Margot
the
played
parking lot was full.
yeah, Margot played a good part. I just don't. I mean, listen, we all grew up with Barbie, you know, and I guess the spin on it was interesting. The beginning's a bit woke, and then it comes, and then it kind of comes back, and then it was a couple of really interesting parts about the whole movie, but definitely a movie that was produced, you know, with a checklist. It was like just this perfect checklist of how they did it. Like I don't know. I'm not going to get into it here, but you'll know.
I just focus on like I always love like the sets, and then I am like a sucker for like I grew up watching like the Wizard of Oz and stuff, and like the Sound of Music. So like and like the Newsies and Mary Poppins. So like when people do dance numbers, I always just like love and feel like how they practice dancing together and they're doing something. Like I like that sort of stuff. So I liked like the dance numbers and how fun it must have been to be a part of the movie. But I agree with you on like the check mark thing.
Oh, I think the
maybe
best
what
part.
we could do, maybe what we could do for the rest of the Ask Me Anything is we make it a musical and we sing our answers.
Okay. Yeah.
Craig's the
You
lead.
start singing first, Craig.
I love Ken's occupation, beach. You know, his occupation, beach, and then like he runs out with a surfboard right in the beginning to impress Barbie, and like all the sets, like Sean was talking about, they're are awesome. The whole Barbie Land set is just wild, but he runs out and like the waves look sick, but they're plastic. You can't surf the waves; they're just plastic, and he hits it. But the best part about the movie, and the one outside of Will Ferrell, the second best part about the movie, and the reason to go see it is the Ken fight scene. The Ken's fight scene, best part, and then it turns into a dance scene, which Shauna was alluding to, and like those two parts are the best. And if you just see that and you just ignore or try to forget about the rest of the movie, then I think it'd be worth it.
Like on a dumb level, is it like compared to Dumb and Dumber and Super Troopers?
Don't you ever say Dumb and Dumber is dumb.
Those are fighting words.
I didn't say it was dumb. It's a dumb movie. It's a dumb movie. Like
I will not allow.
I taught Connor
Barbie. No, not in the same sentence.
Okay, I taught Connor the right meow from Super Troopers. I had him watch that scene the other day, so now he says to Patty's like, you know, hey mom, can we go do this meow? And she hates it because she thinks that's the dumbest movie ever invented, and that's like one of my favorite movies ever.
I don't know what box you'd put Barbie in terms of like the stupid level, but it's a whole new level.
A whole
like
new
Barbie,
level.
the Aqua song. It's just a Barbie girl Aqua. You know.
I don't know. Maybe we should probably get to some real questions.
These are real questions.
We're letting the questions marinate a little bit while we're talking about Barbie.
Okay, I do have one. We'll start with Aaron because he submitted his, and I think he's here. I think I saw him. He said he's got a relative that wants to join forces and interject $100,000 into his business for a 9% return, 36 monthly payments, then a return of capital at the end of the term. Would you entertain this? He's reached out to his CPA, but she's on vacation, so he doesn't know the tax implications.
I don't know. Joe, what are your thoughts on that?
Because he's going to lend it to the business, therefore the business was going to give himself a 1099. So he's playing the I want to minimize my taxes there. I just don't know if it would behoove to invest that $100,000 to make more interest and then put it into the business. I just don't know there's not enough information right there. I probably would run it through the policy and then investing, and then take the investment out and then inject that into the business.
It wasn't
then it would-
Aaron lending to himself. It was like a family member of Aaron giving Aaron 100.
It's so it's not his 100?
Yeah.
No, he's lending it to a friend. So it's kind of a lending deal to a
Well, I
friend.
think he's receiving it, right?
A relative wants to
Can you read
interject
that?
100,000 into Aaron's business.
So Aaron would be the borrower. Aaron's getting 100
9%.
grand for 3
9%.
years
At 9%.
at 9%, and then at
would
3
take
years
that.
you get back.
Yeah, I mean, I would definitely take 100 grand at 9% right now. I mean, that's what a home equity line costs. I don't understand that, the tax side of it. You check with the CPA, but yeah, why would you not do that?
The tax
Then he's
side,
gonna have to 1099 it back.
Yeah.
the tax side, it would be a loan, I guess. Like let's say when you borrow money from somebody for like something, it's a loan on the book, so that's like a debt, right? So it ends up being good, I think.
Yeah, so the recipient of the loan would be able to write the interest off that they're paying on the loan. The lender of the loan would need to get a W-9 completed, and then 1099 would have to be issued for the interest payments that are sent.
Yeah, and then the biggest thing is, as long as, like, something that we think about whenever we take on debt, because we do take on debt for our companies, it's just like, are we going to make more than that, to pay it back? So really, that's the next thing is like, how far is that? It looks like Erin says she received a 2.5 settlement and she wants to invest it. So it's just really, I'm not sure. Like if you have no problem taking on that debt because you're going to make that back and your interest payments and all that stuff, I guess it's more of like, that's fine, right?
Yeah. Aaron, you should introduce her to Rob and Nicole Fuller. Because if she's giving you 100 and that's 2.4 million left over, 2.4 million with the Fullers, oh boy. She's doing the math. $360,000 a year without ever affecting their principal. $30,000 a month. Just let that marinate.
Let's, just for devil's advocate too, like let's say Aaron's, I'm not sure what Aaron's business is. If Aaron's just a lender, that would also almost be like borrowing a home equity line. Is that what I'm getting from?
That's how I would look at it.
As long as the spread is enough over and above the 9%.
Right.
Okay.
Opportunity cost. You have to pay the opportunity cost in order to make money. True.
Right.
All right, Aaron, I love you. Just making sure you get your answer.
Okay. So Derek kind of answered a little bit already farther down in the chat, but I thought we could take a swing at it too. Justin says, I took a loan out a couple weeks back. How do I repay it back? Do I have to call or email One America?
Yeah, I would definitely not try to do it yourself. I mean, that's what the mapping team is there for. So the first thing, Justin, I would find out is who's your mapping specialist. If you don't know, email Larry at the Money Multiplier. Your mapping specialist would be the one, as Derek said, your mapping specialist will do all of that for you and get you all the paperwork filled out properly and handle it all properly and even add it to your map. So there's absolutely no reason anyone should not be using their mapping specialist because they do it. There's no cost, and they do all the work for you and they'll even update your map once you do it. So that's the answer. Just we could put it in the chat, Larry at themoneymultiplier.com if you don't know who your mapping specialist is.
Looks like he responded. He knows who it is. So.
Perfect. Then that's who helps you do all of that. And that's who should help you to take the loans and everything.
Okay, here's a tricky one. Okay, this from Gunther says, I have a cousin living in California and I have a sleeping company in Kissimmee, Orlando, Florida. I want a whole life insurance policy, as Chris talked about, but I have one problem. They live in Belgium. How can I get a whole life policy? Can you tell me what I have to do so I could phone my lawyer in Miami?
Yeah, that's good. And I feel like this question might have come in on Instagram, but it doesn't matter. There was 2 people from Belgium, maybe. So in Belgium, they don't have this, but because, let's see, you have, let's say, cousin living in California, and you have a sleeping company in Florida. So perfect. So we've got an address in Florida. We've got a bank account in Florida. The only thing you're going to have to do, and I know you're probably not going to want to do this, is you're going to have to get on a plane and fly to the U.S. to get your medical done, and that's it. So outside of that, I would just, I don't know if getting on the phone with your lawyer would do much. Sounds like you got everything you need. If you have a company in Orlando, which means you got to have an address, which could be the company address. You've got a bank account, and you just have to be here. So I would just get on the phone with one of us, and we can, kind of flush that out and figure out what else you might need to do based on some of the other circumstances. I don't think you're going to have an issue because you have business here.
I don't know, Chris, I've heard recently, like because I have a couple cases like this, when someone's a U.S. citizen, they have a bank account, they have all the things you just named, an address, but they live overseas, Italy, wherever, and they come back to do the medical, they come back to do that application. But I've also had, One America, and I think even Sandra mentioned that they also need to be here to fund the policy too.
Oh, I never heard that.
Social
Maybe.
Security number too?
Oh, there's some unique rules. Every company's a little different. And, I could have rattled off all the rules pre-COVID, but after COVID, a lot of the things changed, which is why they have to come here for the medicals and some of the other stuff. I'd really have to if Hannah was on, she would know that stuff specifically because that's application stuff. I'm sure I'm sure Gunther could do it. It would just require that flight here. The question would be is, do they have to come here and fund it too? And I don't think so, but I don't know. Jason, that'd be worth looking into. Gunther, I would just book a call. If someone wants to put the link up in the chat, that would be.
I also understood that they need to be in the U.S. when they sign the application. Not that how would you know?
That is correct.
But that does need.
That is correct. That's why I said they'd need to come here, and then they could sign the application here, get their medical done all in the same time. Yep.
Right.
A couple-day trip. Yep.
Hannah should be on soon. I think she's just finishing up a call, and then she'll hop on. So I'll save this one, and we can kind of come back to it with her too. Okay. Oh, Shauna, I did want to touch on this. I know you talked about how you're working hard for the Money Tank coming up, and Alex mentioned that he needed to buy his ticket, so you reminded him to do that. But if we want to just go high level about Money Tank and opportunities to still purchase tickets.
Yeah, absolutely. So we still have, I think, 4 VIP tickets left. There's still about maybe 20 general admission. And then, of course, if anybody's interested in virtual, that can be an infinite number of tickets. So we're happy to sell as many virtual spots as we can. In person, it's pretty much 9 to 5, both days on Friday and Saturday. And the schedule is packed with high vibe opportunity. The place is going to be absolutely amazing. And the VIP session is Friday night. And that's just going to be extra time with those speakers and extra VIP, attendees. So you can make even more concentrated connections there, but it's going to be really great. And we can put the link up in the, in the chat.
And I did want to mention Eve. Eve posted for anybody who's attending physically. She's wanting to know if there's any women on here who want to share a room while you're there. So I think Eve, as long as we have permission to connect people, if you guys want to reach out to us, or Eve, you can just put your email in the chat too, whatever is better. And then we can connect people if we need to. And then Eve also stated to Alex, because I know Alex is buying a ticket, about coordinating an Uber to the hotel and back. So there's a lot. We do this a lot for a lot of our events. So there's a lot of coordination going on, a lot of ride sharing, and sharing the load of the travel and all those types of things. So always, if that's a burden for you, just know that there's a lot of people also looking for the same thing.
Yes, we're going to be relying on Uber ourselves. I'm not getting a rental car, so that'll be fun. I might have to borrow somebody's car at some point to go for a beer run or something. So I'm also hoping some nice attendee wants to loan me and Steven their car at some point. But But I just put the codes up in the chat. Also, if you do come, you can bring a guest. There's like a little checkbox to bring a guest for like a very, very small price too.
Real quick, before we get to the next question, Shauna, Larissa just found the most amazing thing, and I felt like I'd bring it to the public.
Okay.
There is a Facebook group that should be perfect for some of you. It's called Cataholics Group. So if any of you are a cataholic, there is now a Facebook group for you. Useless information.
So Chris will be joining that group.
How many cats do you have right
I'm already signed up.
now? You have 9 cats. Do you have 8 or 9 cats right now?
I don't know.
I don't know.
That means he knows, but he's not going to tell you.
Yeah.
Joe needs one for his new housewarming gift.
Exactly.
One for every room, Joe.
Oh.
I'm always surprised. Like, you guys don't seem like cat people. At least not my definition of cat people.
I would never be a cat person if it wasn't for Chris and Larissa Noggle and my daughter. Like, if it wasn't for those 3 people, cats would not exist in my world. I don't think they turned me.
But could you now think of a day without a cat?
I love cats now, which I can't even believe that I do, because for so long I thought I was a dog person.
Cash acts like a dog, though. I mean, I walk in, I'm like, Cash, and he comes running, you pet him, and you know, it's
And he bites you.
Yeah, he does.
Sometimes.
Okay, Therese is asking, can you list a home for sale if you become a member of the Private Money Club?
No, not really, but I suppose in the forum you could. There'd be nothing stopping you from listing your home for sale in the forum. And then maybe somebody will even fund the home. Who knows? But that would be solely in the forum. That'd be the only place that could be listed. And that's not what the site's for, just so you know. So in full transparency.
Okay.
I want to know how many cats Eve has. She's got the challenge there.
I know. I wonder.
Oh yeah, let's see who has the most. Eve, I'm 14 is coming to my mind. Did I get it right? Okay. In the meantime, Amanda, she says, I have a 401k from a past employer. Would it be more beneficial to put it into a whole life policy or a self-directed IRA?
Self-directed IRA, unless it's like a really small account, the tax hit wouldn't be big, but you almost always self-directed IRA.
I was going to say, not enough information.
That's true. You're cutting out pretty bad, Joe.
I am?
Yeah, you're delayed. It almost looks like your internet's on the fritz.
I haven't moved.
Just a kind of a follow-up question to Amanda. Would it change based on her age? If she was 60 years old, would that affect your answer?
I don't know how much it would really affect it. I'd still probably always lean towards self-directed IRA, but after 59 and a half, there's definitely an argument that can be made as to whether or not it should go to the whole life or stay in the self-directed. Then you don't have the 10% IRS penalty after 59 and a half.
Probably depends on what and the amount and everything else. So.
And she's going to pay your taxes when she takes it out anyway. So
one way or the other.
It just depends.
I'm always the wrong person, because I'm always going to lean toward keep the money qualified, just because I come from that world. But I think a lot of people would go against what I say and just say rip the Band-Aid off, put it in the whole life, and that's probably not a bad suggestion either.
I think that if you have both, if you have a self-directed IRA and you have a policy, I feel like, to me, that's just more like legs under the table that could be very helpful. And so maybe the goal is, in addition to self-directing your IRA accounts, maybe you don't contribute to those anymore, and then you just start a policy from here forward.
Yeah, I love that. And that's what I did. So I moved my old 401k into a self-directed, and I've just constantly lent it. It's gosh, I've been lending that since 2015 or 16, whatever year that was that I left New York Life. and I've been really happy with it. I mean, and then I just do all my policy stuff too.
I do the same thing.
Gabby, she did follow up at the end right now. She just said, I am 34 and there's about 32,000 in there.
You'd almost just have to run the math. I mean, at 34, you're young, and there's only 32,000 in. So even if you paid tax on all 34,000 plus the 10% IRS penalty, you're always gonna pay the tax. And at 34, paying the tax now is certainly better than paying the tax after 59 and a half. So you'd really just have to run the math on the 10%, consult with your CPA to make sure it doesn't bump you into a higher tax bracket. And if it doesn't, then there's a strong argument. One.
Well, and then if you do get it self-directed and you start building a policy, correct me if I'm wrong here, but you can, like Tess, for example, I know has self-directed IRA accounts and I think like 3 policies, and she can go into like a deal with all of those vehicles.
Yeah.
On the
And
same
you can
deal.
combine them too.
Yeah, so you
Let's
can.
put down, I've done that. She can do whatever's in her self-directed IRA and then backfill it with the policy, allowing her to do bigger deals because she's got money in each account. And I do the same thing with that too.
So we did get an answer from Eve. I was even way off.
Yeah, so Eve is kind of doing what we do, but she's actually housing 22 cats. We're just constantly donating money to 10 Lives Club from our foundation, which is doing kind of that, fixing ferals and providing medical services. And every once in a while, a cat's going to die because they don't have the money to save the cat. We'll finance, or not finance, but we'll take money from the foundation and give it to the whatever charity it is. So we've been doing a lot, multiple charities, including my one that I'll never not talk about is Howard Stern's wife runs a shelter in New York City for cats, and we donated money to them. All the Howard Stern fans, we are supporting his wife.
I would be open to having 22 cats if I could have policies on each one of them.
Do not fear.
They have
The real Slim Snakey is here.
Maggie's in the house.
Oh, and he's
gone.
And he's gone.
Okay, well, he's doing whatever he's doing. We will go to Shay. Shay says, I'm primarily using my policy for a debt repayment right now. Is it best to pay minimum on cards or pay a little more when I can on those cards, in addition to using loans every quarter to pay them off?
I don't think there's a problem paying more than minimums, but you should always in your mind and on your map keep the minimums as the baseline. But if you have extra money that you can't put into the policy because your policy is built to only hold what it's built to hold, take that extra and dump it down on the debts. Just make sure you keep the mapping team. If you make extra principal payments, let the mapping team know that so they can adjust your numbers.
Yeah, and I think the key point I would be looking at there, as Chris mentioned, is can you get any more on the premium side? If not, then certainly go that path.
I advise, that's a leakage point. I don't think this is Shay's question, but just it popped, so I'm going to mention it. Like in a lot of the conversations, folks with debt, because they don't have another solution yet, they're overpaying. Like if it's $350 a month minimum payment, they're paying $5. Like that additional $150, that money, once that cash is gone, you'll never earn any more money on that money, right? It's gone forever. So that's leakage where you can get that $150. And if you're doing that multiple times, that could end up being your premium deposit that's going to be able to go into a policy, grow forever, getting you the opportunity cost, and then you're taking out the loan to pay off the debt. So you just got to watch again what the money's doing.
That's probably a piece of the equation you'd want to really look at before starting the policy, is if you're overpaying, can we take some of that, run through the policy, like Jason's saying, to get as much into the premium side before we take it out and throw it to debt. So that's what we want to be looking at. But if you already have a policy, I'd try to get as much in the premium side as you can, and then I guess either start a new policy or throw it into debt.
Okay, Facebook user Says, could you show how someone with 100,000 cash value in a policy could reach maybe 1 million over the next 9 to 11 years with investments as well as growth in the policy? How much would you need to contribute annually as well as the rate of return?
Yeah, geez. Craig, you want to take that one? We kind of just did that for Kevin.
Yeah, so I guess the question they're asking is how much they have to fund it initially. And of course, you can always do the dump in and get that money in there initially. So if you plan to do a dump in, we could, kind of back into those numbers. But, one of the thoughts is we put the money in the policy and then pull it out and say put it in a private money club, private lending deal for 12%. So we did a case like that, and Chris, I don't know if you've got the numbers memorized, but I think in the first year we were down about 6%.
Yeah, it was 6.08% first year.
Yeah, and so what we actually end up doing is, because you can't get access to 100% of the money, initially, is you're going to take a little bit of a dip down, and then it's just going to go up and up and up every year from there. But we do have some models we could run through that, but there's a lot of other variables here where we get dump ins, the premiums, and where you want to put the money to grow it. But we could certainly back into those numbers.
So you're saying you have a spreadsheet for that, Craig, and they're saying they have 100,000 in cash value already. So my curiosity would be like, well, what's your annual premium? Like, what are you putting into it, injecting into it? And then that tells you how much you're gonna be able to lend out of it. And then you can start looking for appropriate deals, whether it's equipment, flipping, or you're doing private money lending or whatever that might be. So.
Yeah, I think there's a couple pieces of info, and you can reverse engineer that real easy. Like you mentioned, if you got 100K in cash value, we'd need an in-force illustration on the existing policy to see like where are you at, like what stage are you, year 2, year 3, and then just need to know what you're putting in premium deposits, and then from there the rest is just engineering.
Yeah, because what we've done in some of the models, we'll take that initial max amount of cash out, put it into the funding, and then every premium deposit you put in, we just take the max out and throw that at the private lending fund and just keep running that money back in. So you would at least pay the interest charge every year and then just keep recycling that back into the private fund. And so it just keeps growing and growing and growing on the capital side, creating more income. But yeah, I think there's definitely some more pieces we need to understand here that we can wire this thing up.
And Facebook user, I think a simple way to do this is the rule of 72. Just right here, mathematics. If you think of the rule of 72, your money will double every 7 years at 10%, well, 10.2%, and will double every 10 years at 7.2%. So if you're making 10.2% every 7 years, your money doubles. So can we take that 100 grand and make 7%? Yes, you can actually probably make almost double that. You can probably almost do 12 to 14%. So then you just look at it and all right, so now your 100 doubles every 7.2 years, actually a little bit faster, but we'll just use that as simple math. So that's where it becomes important to know how much additional money are you putting in each year, because that's the simplest way to look at where you're at. So if you could use just 100 as the calculation, just use the rule of 72, and you can use 10% baseline, which means in 7.2 years, your 100 becomes 200. So can you reach over $1 million in the next 9 to 11 years with just 100K? No. So that's where your additional future premium deposits makes up the difference. And then if you're really good about taking the interest you earn, let's say it's 12% on 100, that's 12 grand, and you just keep putting that back in and lending that back out. That's what Craig was alluding to in that model we have. That also will help. So I think you could do it. We just need to know how much more to put in.
Yeah, I mean, the biggest thing we need to know at this point is what are you putting in premiums every year, and then we can say, yeah, this looks like it's doable, or probably not.
Kind of on that, I'm going to skip a little bit because the Facebook user also had kind of a question on that same note. At which point would you consider yourself a millionaire? When you make $1 million per year, or you have $1 million worth of cash value?
Gosh, it's an interesting question. I think when you're considered a millionaire is when you have $1 million in assets, not including your house. That would be considered, all intents and purposes, a millionaire. I think some people that make $1 million a year say I'm a millionaire, and they have nothing because they spend every penny. But they're like a, what would you call those? A wannabe millionaire. Like they make $1 million a year, but they spend 990,000 of the million. And they're definitely not a millionaire, but in their right mind because they make $1 million. They are. And being a millionaire has nothing to do with $1 million in cash flow. It's $1 million in assets minus your primary residence.
I would go with assets, like you said.
Yeah, I guess true millionaire. I guess ask if somebody says they're a millionaire, say what makes you a millionaire.
Yep.
Because we might all define it differently. Okay, has Dave Ramsey responded to you about the infinite banking concept?
No, his ego won't allow him to. He hasn't responded to me. He hasn't responded to he hasn't responded to any of us. So Garrett, Callum, so many of us. We did videos. He hasn't responded to anything.
I wonder if you could call, like, does he have like a hotline or whatever? Because you should call in and ask him questions.
You should call and like come up with the most obscene things and just have him dissect it and be like, oh, I had this guy tell me about the infinite banking concept, and it really made all the sense in the world. We ran all the math on it, and it was exactly what we were wanting. But I know you always say you don't like that.
Yeah, like I have 19 policies. What should I do instead?
Okay, Terry's got 2 parts here. So I'll read this one's new policy, 12,000 to the base, 65,000 PUA or dump. He would like to pay off the rental property, which is 56,000. They'll owe 40,000 in taxes for 2023, and they need a car by September. What should they do first?
My first
This is
question
numbers.
is like, is it necessary to pay off the rental property? You know what I mean? Like sometimes you have to like weigh, is that
This is a
smart?
Craig answer for the numbers. Because you would want to see if the investment would give more.
Yeah, I mean, there's some numbers to crunch, but also some philosophy out there. Just like Shauna said, does it make sense to pay off the rental property? So when you pay the rental property off, you've got a bigger cash flow because you're not paying the mortgage. But can you make more money than you're saving, right? So could you take that equity and put it to work and make more money than you would save? And I think you'll find out that you probably could. But then there's some people that want to pay it off just because you're going into the retirement phase and you don't want to worry about it. You just want to cash flow it. So I think the first piece I would say is from a philosophy perspective. Do you want to pay it off? And why do you want to pay it off? Or can you put the money to work and make more somewhere else? But so those first numbers, what was it, 12K on base, and then she has a 65K she's trying to figure out what to do with.
$700 a month, is that the amount that, what is the $700 a month?
Maybe the mortgage payment on that 56.
I would find that hard to believe that it's a flat 700. If it is, it comes down to the math of it. So 700 a month times 12 divided into 56. That's like getting a 15% return on your money.
Yeah, so that would be a good deal then, right? To pay it off.
Yes, and then, you know, if you did that, I mean, you can get a pretty nice car for $700 a month. The taxes, I wouldn't use the policy to pay, although you can. You just got to recapture the money. But the taxes, you know, a lot of times you just want to try to pay that out of reserved or earned income. If you can't, you can use the policy and then just charge yourself. Like I charge 6% if I ever use the policy for stuff that I'm doing. But I just think you could go either way. I mean, the car is going to probably cost you 6-7% interest nowadays, and then that mortgage seems pretty attractive. That's $700 in cash flow that could be used. Could be used a lot of things.
For the car payment, that does make a lot of sense. But like plot the 56, but then how are we
Yeah,
recapturing?
you got to recapture money into the policy on the 56.
So then you'd have to take money out of your W-2 to do it.
Yeah, if you paid the 56 off, you got $700. Maybe you buy a car that's 350 a month, and then you recapture the rest, and you just run the math on the amount that you're recapturing to see how long it would take to pay it off. Because it really doesn't matter. And then once the car, is bought and paid for, you just redirect that over. When you're the bank, you can kind of structure your loans any way you want, because you set the rules. So you could definitely make that work.
I can play devil's advocate and do the opposite. Take $50,000, put it into forklifts or put it into semis, make $3,000 a month. Take that $3,000 a month, pay off your $40,000, use the extra for a car, and you can do it all at the same time, and you don't have to recapture using your W-2 because your principal is still there and it's still yours, and you're just using somebody else to cover your bills and use interest.
Yeah, I think we're all just using you as the guinea pig on the semis. That's all.
I am though. I honestly, Joe, I'm getting close. I'm getting close to a semi.
I mean, I got piling up too that I just did a loan, but it's a small one. And then once I get Larissa's car, I'm trying to prevent myself from buying a Porsche, and Sean has been helping me. We had a near disaster yesterday.
The bid, and I'm like, it's fine. It's not meant to be.
We avoided the disaster because it went crazy, and I avoided it. But yeah, we just gotta stop looking at it.
All right, we'll move to Peter. Peter,
well, keep saving
first
your
of
money
all,
up, then you can get a big one.
First, Peter says he just got his first whole life policy approved yesterday, so congratulations. Looks like he'll be able. Here, I'll put it up. Looks like he'll be able to utilize about $10,000 of it. Besides his house and the truck loan, he's got no debt. What would you recommend investing that $10,000 into to utilize this policy? He's very interested in the PMC 12-week coaching.
I mean, investing in yourself is always the best investment you'll ever make.
Yeah, it really is.
One question. So what is the amount on the truck loan? Like, is 10,000 give you enough to recapture that payment? Right? Because that'd be one move. Another thing would be you're investing in yourself and between the real estate between your ears. Like, you're never going to go wrong there. Like, go learn. So when you have more than 10,000 and you know what to do with it, right? And make the relationships too. Because as you rise in your circle, your knowledge, your influence, you're going to want to surround yourself with other people that are doing the same things.
And I feel Joe and
I was giving you a woohoo. So you got to celebrate that first one. Congratulations, man. I didn't know I was muted. The next my family was leaving and I was worried they were noisy. So.
And we used to say 10,000 wasn't enough in Private Money Club, but a lot's changed there. And now 10,000 actually can be effective in Private Money Club.
And I think Joe and I are probably going to ask the same question about the house. So what's the house look like? What's your equity? What's your debt? Because we want to use that lazy money to do great things with that too.
Get a jump start.
And I'm with Jason. I'm with Jason on the coaching. I've spent like my first money this year, like on a lot of that stuff, like masterminds and coaching and stuff. And it's been, it was like scary to take the leap, but it's been super valuable. So I like where your head's at, where that was even part of your question.
Yeah. Okay.
Make the leap. Do it. Be like Nike.
Emil is wondering about opinions on today's Fed's rates raise and how this affects our money.
I just did the whole second part of the webinar today was all about the Fed increase. Wonder about the opinions on today's Fed. I mean, it was already anticipated that Jerome and the Fed was going to start raising rates, and 25 bips falls right in line. So I think some of it was built into the markets, but remember, right now the markets are like a crying little baby, and everything that happens with the Fed, the markets are shunning off and not liking. So the markets kind of had a knee-jerk reaction, but I think it was built in. I don't think it hurts us what we do at all. Matter of fact, you'll find you almost got to think the opposite when you're thinking about what we're doing. You'll find that the Fed increases helps the insurance companies because now insurance companies are always buying bonds. And on the webinar today, the Wealth webinar, we talked about what 2-year Treasury bonds are paying, what 1-year T-bills are paying. I mean, you're talking 5%. So if that's that, and then 30 years are going up, every time the Fed increases the rates, that means that the rate on your treasuries goes up. And why is that important? Well, that's important because that's what the insurance companies are buying. So the more of these bonds that the insurance companies buy at today's rates, which are these really high rates, because the Fed is kind of doing this knee-jerk reaction to fix the thing that they very much created, all the insurance companies are making a bunch of money in a spread. Because if they're guaranteed, and 7702 plays into this perfectly, because they're guaranteeing a lot less than they were pre 7702. So if the insurance company is guaranteeing you 3.25, but they can buy a 1-year T-bill that pays them 5, or they can buy a 30-year Treasury that pays them 4.9, like they're making a hell of a spread. And that always lands one place, and we love it. Brent calls them dividend clippers. Like, we're actually not clipping any dividends. Your dividends in policies are more than likely going to start going up here in the near future because of this tailwind the insurance companies are going to benefit from for literally 30 years into the future, and that is this high interest rate cycle. So for what we do, it's a good thing. It bites a little bit now because things are more expensive, and some of the insurance companies have raised their loan interest rate, but not much. It's still, shoot, you can get a loan from the insurance companies for like 5%, but the bank's going to charge you 7 to 9. So you can see where this all plays into our computer. Damn cats.
I was about to blame Joe.
I was too. Yeah, Steven, I was going there too. I was a Joe. Shh. Come on, man. He looks confused. Maybe I should disappear and come back.
Is he frozen?
Oh, Joe's
I
gone.
think he froze. He likes when you disappear and come back, though. He starts laughing. It really disrupts it.
It looks like Hannah. I was gonna say, it looked like Hannah was on deck.
He thought it was him.
Took y'all long enough.
Were you sitting there?
I was sitting there. That's okay.
Did you want to be found?
10 minutes.
The real question is, did you want to be found?
Somehow somebody turned Joe into Hannah.
I know, it's like
He said
simultaneously.
he's a magician. That's a good one.
Okay, they were finally okay. It says, Facebook user, would you recommend multiple policies that you would pick up over time, or would you recommend a large term policy, for example, $1 million, that you convert to whole life in portions at different periods of time?
Multiple policies, unless you got medical things that could prevent you from being insurable in the future. You could probably just do both. Just start buying multiple IBC policies and get yourself some term, just to protect that, protect your death benefit on the other side. And I hate converting term to whole life the way we build them, because it never works. It's very difficult to get it to convert to something that we want to build. So by doing the term one, you're kind of restricting yourself on the build and the design you can do with your policy, because you're only limited to whatever term insurance you have in terms of death benefit. And if you want to put more money into a policy and premium deposits, the death benefit your term has is going to restrict you to only convert that much. And plus, depending on the company you have, some of the companies don't allow you to convert to the way we design them. Hannah, I'll let you touch on that. We've done this a lot.
Yes. I recommend doing multiple policies over the course of my lifetime, just because it follows the saying that Nelson Nash teaches us, your need for financing cash in your lifetime is far greater than that need for death benefit. But for instance, I was talking to somebody earlier today, and they're putting policies on their 2 grandchildren, and they say, Hannah, I want to have at least $100,000 in death benefit right off the bat. So, I mean, if somebody has death benefit guidelines that they need in that policy, like their whole life policy, we can do it. Or I do recommend, if you do need that term policy. So, like, here's another example. I got people who will take out loans from a bank, and that banker requires them to have death benefit on their body. So, they'll take out a term policy for that death benefit amount that equals the loan amount for the bank to suffice them. And then, if they ever wanted to in the future, once that bank loan is paid off, then they can convert that term into a whole life and then use it for themselves. But if I had a preference, I would do the multiple policies. Unless you're right, Chris. If I had a health condition going on that maybe in the future I won't be able to qualify for more policies. So let's lock in the insurability now, and then later we can convert those when we're ready.
All set.
Hannah, we had a question early on that we think we answered, but there may be parts that are left out with any new updates since COVID. So I'll put it up here. This person has a cousin living in California, has a sleeping company in Florida. They want a whole life insurance, but they live in Belgium. What are the requirements for them to get a policy?
Yeah, you just got to be here in the States. So you got to complete your exam here in the States, and you also got to sign off on your policy contract here in the States. And since I'm thinking about it, you got to have a U.S. bank account, you got to have a U.S. address, and you do have to be here in the States, meaning that for instance, if you just have a home here or an address and then you just come for 48 hours out of the whole entire year, the 365 days, the insurance companies may not find an insurable interest of you being here in the States. But again, that's all up to us making sure we're painting the picture correctly for the underwriter. But I would say that if you're in Belgium right now, you got to be back here to complete the exam and sign off on your policy contracts.
Okay. Here's that up. Thank you. Last question that I see, unless I missed one, is from Dominic. When you open your first policy and go through a medical exam, do you have to do that again and again when you open a second and third policy?
Yeah, so Dominic, that will depend on the time between when you get your first exam and that next policy. So it's typically within 6 months. You don't need to do that another exam. And Hannah, I think some of them push out to 9 months, 6 to 9 months. That's where that window.
It depends too. Like if you're taking on a lot more death benefit, a lot more risk, and they want to go run that back through if they want to see if there's a reason. Because I've had people who've had, the clean bill of health, got preferred status, and then they went to open a second policy within a month and had to go back and do additional things in underwriting just because they're taking on a lot more risk. So it depends. It depends on what you're creating.
And if anything changes with your health and that shows up in your database, there's going to be some more scrutiny there as well. So, but assuming there's nothing going on there, you're healthy, everything's great, 6 months is a good time frame to try to pop open another policy.
Okay, and then I think we're almost at time, so we'll wrap up with Edward's question. He says, is there any way that someone could convert their military term insurance into a whole life and use IBC?
No.
Here's a rule. You can only convert it within that same company. All right, so if you got a Mass Mutual term policy, you can only convert it to a Mass Mutual whole life policy. You can't take a Mass Mutual term and convert it to a Lafayette Life whole life policy. But I say that, hold on, let me just tell the community though, the Lafayette Life is the only company, they have a really cool term exchange program where they will take any US based life insurance company. If you have a term policy with them, you can convert up to $500,000 in death benefit, only 500. And I think it has to be issued within 0 to 60 months. So that term policy cannot be any more than 5 years old. And I think the ages on it too is I think you cannot be any older than 65. It's either 60 or 65. But if you do have that and you fall into those parameters, hey, it's less than 500 or it's at 500, I'm younger than 60, and I've had this policy for only less than 5 years, you could exercise that Lafayette Life Term Exchange program. So just reach out to me and we can talk about that. But I've done that before, about 3 or 4 times.
I think they're probably talking about the SGLI term, which I don't think would be able to do anything with that.
Well, but yeah, I didn't. I remember you telling me, Hannah, about that Lafayette program. So I think you could still do it with Lafayette under those guidelines. But 500 is not going to get you a very sizable policy.
Well, guys, I don't see any more questions coming in. I think that's
Great
it.
job, Barbie. You were awesome. Awesome.
Yes, make sure
moderator.
you all get out
Missing-
there and watch the Barbie movie, and then you'll never, ever, ever have the desire to go watch it again.
Margot Robbie is such a great actress. Just
Oh,
saying
she's
that.
beautiful. Yeah, she is
And
a great
Ryan
actress.
Gosling, I love him. Marry me, Ryan.
And, all right, here's a question I have for you, Hannah, and
What?
maybe Shauna. So, in that movie, Ryan, like, he's ripped, like he's ripped and cut.
Airbrushed.
Do you think that's airbrushed, or do you think that's real?
I think it's real, but I feel like
I'm going with it. It's real.
it's real, but I feel like he had to take something. I'm not saying like he probably really had to like take supplements or something to get that.
Give me the supplement he took, please.
'Cause it was real. I don't think that was fake.
What do you think, Hannah?
I think it's real. I mean, have you seen some of these actors and actresses getting into the roles of what they got to do?
Yeah.
I think it's real. I don't
Brendan
know.
Fraser. Oh man, that most recent movie was crazy. It was like the opposite direction though.
Yeah. Well, that will let everybody fester on that. Whether Ryan Gosling's, workout bod is real, to play the Ken role. Argo, we all know that that's about as real gets. She didn't even have to freaking do anything but roll out of bed to play that part. And outside of that, good luck watching the movie. You will be done if you're done watching it.
Well, Chris is
Hey,
convinced
Shauna-
me that I don't need to go to the theater, so thank you, Chris, for that.
The ending,
Shauna,
awful.
real quick, what time does Money Tank start August 4th?
If you're watching it virtually, it's going to start at 10 a.m. because in person, we're going to be doing networking and stuff, probably 9 to 10. And there's no reason for you guys to just be sitting on a line waiting for us. But so virtually 10 and then in person 9.
Again, there's the codes to sign up. Don't forget to do that. That's coming up fast here. So
Really fast.
get your tickets while you still can.
Awesome. Well, with that being said, thanks everybody for joining us for another week of Ask Me Anything Happy Hour. We will see you, probably tomorrow. And until tomorrow, stay classy wherever you're at.